Hello and welcome everyone. This is John Person reporting for the Bottom Line Commodity Report. It is Tuesday, May 8th. Now, let's take a look at the market, the health of this breakdown, or shall I say the health of the overall market. The chart we have in front of us is the cash S&P 500, the Spyder Etf. The reason I'm showing this to you is because it looks vastly different, or a little bit different, than what the futures market looks like. And one of the main reasons is because yesterday's low was done in the pre-hour session. Today's low was done during open outcry session, and we have a very long shadow, long tail. And if you look at the open-close relationship, we actually closed above the open. Looking at the Spyders, we did not make a positive close, but I mean, if you think about it and you look at this, you say, well, you know, that close where we are today, we closed at 136.55. Yesterday, we closed at 137.10. To me, that's virtually unchanged. More importantly, let's take a look at old lows, shall we? If we take a look at this chart, you'll see these are the old lows. We didn't close below those levels on a cash basis. So for me, when I look at the advanced decline line, and that's what we have here, it's the advanced decline comparative ratio on the S&P 500, and that's why it says SP here, ADCSP. Today's action, we did not see another dip into newer lows. The trend line, I guess you could call it a trend line, it's not a very healthy trend line break, number one, because it just barely broke below. If I just get out here, it's right on the line. It's not really below the line. So the only other thing we could say is looking at prices, even though lows are lower, okay, the advanced decline is not lower, and more importantly, let's take a look at the on-balance volume, because that certainly did not make newer lows from this time frame or that time frame. Right here and right there. So the health of this breakdown is in question. I don't think we're going to see an immediate crash and burn. We do see the potential for a shoulder, head, shoulder. We did not close and break below what I would consider the neckline, and there it is. It closed just a little bit below or on the neckline, just a little bit above it. So the point is, if they're looking at this as a 1, 2, 3, 4, 5 day decline, we're definitely due for a bounce, and these long shadows will show that we could bounce. And don't be surprised to see the S&Ps get back up to like 1390 area. So now let's take a look at the E-mini S&P, and as you can see what I'm talking about, these long shadows. So yesterday's action looks more like a tweezer bottom, a double bottom, and then we look at these long shadows. I would say that easily we could come back and test 13. The first test of resistance is going to be around 1383, and let's just take a horizontal line and take a look at this. These old highs, these old lows, lows here, lows there, excuse me for that, highs in here, big line of resistance. So that to me I think is going to be tomorrow's potential resistance. Now let's take a look at some daily pivots. And daily pivots are only suggesting it's still in a bearish decline, 70 or so. And yeah, you know, but maybe we could get a rally up in there. Let's take a look at the weekly, and 1380 is the weekly pivot point. So the market, if it gets up to the weekly pivot point, and I don't know if it's tomorrow, Wednesday, or Thursday, but I think it'll be a little bit, the first test of that resistance, you might see some selling. We can only take this one trade at a time, but for the S&Ps, the way it looks right here, it certainly found some short-term support in the marketplace. I can also say the same is true in the NASDAQ, except for one minor difference. We have broken below the lows of the advanced decline. So the price has made newer lows, and yet so did the advanced decline. The on-balance volume has not. So, and that would make sense because the market has had such a strong rebound off the lows. But still, make no mistake, we are in a downtrend, and I think even up in here, if we take a look at our weekly pivots, midpoint of this breakdown candle right up in here, 26, say 60 to 70 zone, 26.65, let's call it, will offer resistance in the next day or so. And should, if it closes above that, then obviously we're going to be watching this from day to day. Okay, let's take a look at the euro currency real quick, because the euro currency actually did not see the type of rebound because the cash, the market there, with Europe's close, it just unfortunately just hasn't. I mean, with everything going on in the world, you would think that this market would want to break down. It's got this gap, and I think first off, from Friday to Monday or Sunday night, it's going to want to fill that gap, 131 area, 130.70. The low of the gap there is 130.82. I think that market fills that gap, and a little more so because people are still short this market. And here's what I would be looking for. Let's take a look at the weekly pivots here. I don't know if we're going to get to 131.52, but I'd feel a little bit more comfortable looking for a short somewhere around 131.10, 131.20. Look for something like that. And that's a 120-point rally. I would absolutely be looking to be a seller up there. So for bottom line subscribers, I would be looking to sell one mini euro currency contract, and I'm going to actually lower this in the midpoint of the two moving averages. So I'm looking to sell at 131.05 on one E-mini euro currency with 131.59 as our stop. To me, I like that trade, even though there's a long shadow. I think if the market does kind of recover, come up, fill the gap here, just kind of maybe take stops, that ought to be a safe area to be looking, and we ought to be able to get something out of that trade. Now, in the bond market, it did not close above yesterday's high. That's a doji. We got to watch this range. The market's probably going to close in between yesterday's doji's high and yesterday's doji low. Within 3 days, if we close above or below that doji, we have a failed doji top, which means we could see bonds accelerate even higher. And if we get a low close doji, that means we have probably a little interim or intermediate term top in the bond market. We'll keep you posted. But the bonds certainly do look strong, as does the knob spread that we've been talking about. And speak of the devil, this is the knob spread. We closed at 11.16. I'm going to change this to a intraday. I'm going to go with a 15-minute chart. You can kind of see we actually had an intraday high of 11 and 22/32. So we did come off of that high, but I mean, think about it. We're making progressively higher highs and higher lows, and it is still in a trend. We have not broken out of an uptrend here, folks. So therefore, and let's get that uptrend going. There we go, close enough. So this is a 15-minute chart. Let's go to a 60-minute chart real quick. As you can see, this particular market is, if it does see any type of sideways action before another ascent, it's going to be maybe another day or two. So that's what tells me that maybe the equity market could see a rally. If it's a weak rally and it fails, and this knob spread does not collapse and get back underneath this 10, or let's call it that high right there, then the knob spread gets under that high, then I believe the stock market's going higher. But until then, we're on the defensive. People are interested in buying this knob spread, or they're looking to buy the long end of the yield curve. And I just thought I'd share this chart with you. If you're thinking you're having a bad day, well, hopefully you don't own Green Mountain Coffee Roasters, because this stock has gone from just last September at $100, $110 to about $25. So $26. It might be time to actually look to be a buyer of this company, to be truthful. And I know this isn't a part of the bottom line commodity report, but I like the business model. I think Green Mountain Coffee Roasters aren't going out of business. This might have been a little bit overzealous at 110, but certainly at 26, I'll give this another day or two. Keep your eye on this one, and let's look for maybe a buy signal. If we take a look at maybe pivot monthly support, we've gone below it, but last month's support was around 30. I'll do some more research on this one. I'm intrigued by this as a big coffee drinker. I think Green Mountain has a shot of at least a rally back up, from a $10 rally from here. So I don't know if we're going to see pain of another $3, $4 to the downside, but pay attention to this one. You might have a good shot at a move if we come into like maybe I'd say 23 to 24 with tight stops, or we'll look at some to see if there's any options trades on that. Tomorrow morning, we're going to be doing an energy report. So speaking of energy, this is crude oil, formed a doji yesterday. Market's got these long shadows in here, $95 to 97.5 seems to be, that $2.50 range seems to be some significant support in the marketplace. I drew this line in the sand because somewhere down in this area, I thought that's where the market might see some support. Look at this massive sell-off, but look, where's the volume? And most of this was done based on liquidation due to an increase in margin requirement by the CME. Speculators kind of liquidated or lightened up their positions. That doesn't mean they're not going to be willing to trade a high margin product. They're just probably going to just lighten their positions up. And so typically what's interesting is, and I talked about this at last Friday's webinar, typically from a seasonal perspective, we see early month declines into mid-month, and this year, it's exactly what just happened. So I think that we could be looking at an opportunity to be a buyer on this market here. Tomorrow in the webinar, if you have any questions regarding what we're going to be talking about on Thursday's ag seminar, or if you have questions on what we're going to be covering if you're coming to Las Vegas for our 2-day seminar, Monday and Tuesday, that's going to be on May 14th and 15th, call the office, 561-655-1881. Email us at johnp@nationalfutures.com, and we will get to your questions immediately. In the meantime, tomorrow morning, 8 a.m., energy webinar. Thanks, everybody. I hope you found this information helpful. Don't forget about that euro selling 131.05. Mini euro currency per newsletter unit, 131.59 is our stop. And that's a day order for tomorrow only. So if it doesn't get filled by tomorrow's close, boom, cancel those orders. And I'll put that in an email to alert you of the video and the specific trade. Thanks, everybody. Have a great evening.